So Bitcoin has been incredibly stable since its June lows. In fact, the volatility, 30-day volatility of Bitcoin has dropped below the 30-day volatility of the S&P and the NASDAQ.
Hey guys, welcome back to Library of Wealth. Today we have ARK Invest CEO Cathie Wood discussing her outlook for the current bear market, as well as the impact that the stock and cryptocurrency markets are having on Bitcoin. Cathie will also talk about her financial outlook for the coming several months and whether or not she can see an end anytime soon. Although the effects of the recent economic crisis are currently being felt by Bitcoin, she thinks that the current economic downturn is just a preview of what is to come. We will examine her forecast for Bitcoin, as well as her investment strategy for the stock, cryptocurrency, and capital markets. Let's listen to Cathie's prediction about the current market collapse, the recession, inflation, and the effect of interest rate hikes on capital sectors towards the end of our video. Don't forget to like and subscribe if you like the content we do here on this channel. Let's get right into the video.
If we are right, and of course we could be wrong, but if we're right, truly disruptive innovation is going to move into a growth trajectory that we believe will make what has happened recently to their stocks look like a blip in hindsight, given the great strides ahead. So M2 growth peaked at 27% in mid-2020. And as of September, was down to 2.6%. It looks like October could be below 2%, maybe 1.5%. And effectively, money is falling. Money, if you look sequentially, is falling. Now, the only time we've had a sustained decline in money on a year-over-year basis, again, we're not negative year-over-year yet, but that's where we're heading, was during the Great Depression. And hold that thought, because I'm going to describe why we're not in the environment that the Fed thinks we are, which is the 70s. And the reason is, I think I set this up in the last YouTube video. In the 70s, when Volcker inherited a very bad inflationary situation. So inflation was moving into the high single digits, low double digits, mid double digits is where it peaked. So he inherited that, but it had taken 15 years for that inflation to move to those levels. Now, it started in April and May of 1964, Vietnam War, Great Society programs, the Johnson administration, putting into place many social programs at once. So we had fiscal policy moving really out of control, and monetary policy accommodating it. And also, as we went off the gold exchange standard in 1971, we closed the gold window. That was the last semblance of discipline in our monetary policy. That was 1971, as I said. You know, all hell broke loose. We had OPEC quadrupling oil prices. We had the Fed accommodating those oil prices, which eventually got into all kinds of indicators, including wages. And you'll often hear the expression cost push inflation. It comes from the 70s. The cost push was wages pushing through. And I think this time is very different.
Cathie believes the Federal Reserve is making a huge mistake with their monetary policy and thinks that more pain is coming for the housing, credit, and crypto markets in the coming months. Wood believes the drastic actions by the Federal Reserve are crashing the market, but says that these actions are resulting in suppressed pricing, which provide the savvy investor with substantial investing possibilities.
Then you had Volcker, as I mentioned, going from 10 to 20%, so twofold interest rates, and that did the job. This period is not 15 years. By the time the Fed started addressing it, it was 15 months. So we didn't have a lot of time for inflation to get out of control. And The inflation that we were talking about this time is not the monetary driven inflation. It was a supply shock to the system. So the supply chain imbalances, which I never thought would last for 2 years, still puzzling over that one, that was a real problem, a supply shock, a shock to the system. So if the supply's not there, but the demand is because of all of the stimulus, then what happens? Demand up relative to supply means prices go up. They go up until the supply meets the demand. Now we're moving into that part of the story. And I think we'll see it in action, in dramatic action this holiday season, as retailers who are just brimming with inventories, trying to figure out what to do, are forced to slash prices. And we're already seeing 20, 30, 50% discounts if you go to Walmart, and I'm surprised to see it at Walmart. I thought that was everyday low prices, Target, and other places. So Bitcoin has been incredibly stable since its June lows. In fact, the volatility, 30-day volatility of Bitcoin has dropped below the 30-day volatility of the S&P and the NASDAQ. And you'll see that in our Bitcoin Monthly. We're publishing it this evening. And there are some very provocative charts in there that are suggesting we're in a bottoming period for Bitcoin. Now, we do have to be careful. We've seen a nice base develop here. And as many of you might remember from our Tesla call in the day, I said, you know, the base, whenever you have a very long base, and in the case of Tesla, it was 5 years, but whenever you have a very long base, something big is going to happen, because that's the bull and the bears dueling each other. In the case of Tesla, our bet was we'd have a big upside breakout, and we did. In the case of Bitcoin, we would expect the same. The base is not nearly as long. And a lot of the on-chain analytics are supporting that point of view. We're also going to be talking more about this in our market update next Tuesday. And in the next few weeks, you'll see 3 research papers, one on AI accelerators, one on the Bitcoin energy / utility ecosystem, pretty provocative, and one on how important, maybe the most important innovation in history will be autonomous mobility.
Wood believes the Fed rates will decrease, but says it's currently showing signs of extreme weakness. Along with the household employment charts being down for the last 4 months, Wood has never seen a swifter increase of the bottom. She says that the Fed doesn't care what happens to the economy now, and they're overly focused on inflation. If Wood's interpretation of deflation as cyclical is correct, the coming deflation will actually be a good environment for the financial market's growth. What do you guys think about Cathie Wood's market outlook for this year, and how the Fed is handling inflation indicators? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.